I think we're live. Ladies and gentlemen, thank you so much for joining me. I am your host, Frank Chaparro, the Director of News at The Block, and I am joined by two luminaries of the cryptocurrency and blockchain world, Haseeb Qureshi of Dragonfly Capital, an investor in the space, and Marina Shaw. She does business development at Binance US, a digital asset marketplace and exchange venue out there in the West Coast. I believe you guys are both West Coasters, I think. But in any case, regardless of where you are or where you're joining us from in the audience, we appreciate you stopping by. We're going to be talking about the social good. Where does cryptocurrency, digital assets, and blockchain fit into making this place we call home a better place? And before we turned on the cameras, we were kind of doing some riffing, and it was honestly might be more interesting than what we talk about live, but we'll hopefully reach that same bar. We're all kind of, in many respects, working for firms that are capitalistic in nature, the forefront of what I do as a reporter and what Haseeb does as an investor and what Marina does as a business development person at an exchange is not necessarily at the forefront of social good and social welfare, but nevertheless, we come across these questions and we grapple with them in our own respects. And so we're going to do that here today. I guess the first point I think we should explore is the Bitcoin versus blockchain, or the cryptocurrency public blockchain versus DLT sort of debate. In the near term, where do we see which technology or which corner of the market do we see doing more good for regular folks in terms of bringing about, better conditions for workers, or fairer working environments, or, all those things that folks associate with a better lifestyle?
So I can take a crack at this.
Please.
So crypto, or this industry has oscillated back and forth between the Bitcoin narrative versus the blockchain / DLT narrative. DLT stands for digital ledger technology. And right now, I think we're clearly back in the Bitcoin crypto phase. But as for the record of which has been more impactful on the welfare of average people, I'd say neither of them have really gotten anywhere. So the record of DLTs, I think there was a lot of excitement about them in 2017 and 2018. But it's pretty clear that not a lot has actually happened. Not a lot has been deployed. There isn't much to speak of yet. There's always inevitably more things that people point to in the future, such as central bank digital currencies or other experiments that are currently being tried out in different places, but nothing that's actually has a track record to speak of. And then on the crypto side, most of what we see is really speculation. So even Bitcoin itself, although it's done reasonably well through the last 6 months, it's been fairly tightly correlated with equities, and it's still a speculative asset. Same thing is true of almost everything in crypto besides stablecoins. So my sense here is that we're still very much in the toy phase of technology for this stuff, where most of what it appeals to is sort of smart people in the first world for the most part, and that doesn't mean that it's not going to have an impact on the road in a much larger way. We saw the same thing with the internet. We saw the same thing with computers. Is that they started as being something that basically was a consumer good for nerdy people in the first world, and eventually empowered millions of businesses all over the world. I expect crypto to follow a similar trajectory, but it's going to take a while.
Mm-hmm.
Yeah, I feel roughly the same way. I think we have this technology that is developed and it's being speculated on, but we don't actually know what we're going to use it for. Right now, we're all just thinking, will it earn me a yield or anything like that and make a better return? But what more can it be used for other industries? That's where I'm actually curious about.
Mm-hmm, mm-hmm. And for the most part, we are in this speculative phase. So it's not to the point where Bitcoin or cryptocurrencies are at a point in the adoption curve where we're seeing an immense amount of adoption among folks who are not necessarily rooted in Silicon Valley or Lower Manhattan. But there are some pockets of that are starting to emerge. And if you think about Bitcoin's value as like a hedge against inflation, or a sort of hedge against different authoritarian regimes, you have seen instances where it's seen some pickup in places like Argentina and Iran during various, geopolitical incidents, especially at the beginning of the year. So we are starting to see that emerge to a degree. I'd be curious though, like as an investor, as a person working in an exchange, what is your window into that aspect of the technology? My colleague at CoinDesk, Lee Quinn, had an interesting article today out about, living on Bitcoin in the Middle East and how freelance workers in Iraq benefit from accepting pay in Bitcoin. There's obviously this privacy element that makes it more desirable for folks who maybe don't live in countries with the best sort of government structures. But in our seats, we aren't necessarily seeing that directly, but I'd be curious what window you have into that.
I think from the exchange perspective, we're all about bringing financial freedom and inclusivity and having more and more people have access to these options. If you think about Americans today, a lot of them don't even have like $400 in an emergency account, and banks charge fees and limit the amount of interest you can earn and things of that nature. So from the exchange, our perspective is that we are inclusive. We are giving people the opportunity to trade, hold, enjoy the benefits of digital asset trading. And it shouldn't be limited to one group of people, but we want it for everyone. And I like how this is not just Finance US doing it for America, but all the other global exchanges participating in this ecosystem. So every citizen of the world has this opportunity.
When I think about blockchain's potential for social good, I almost translate it into my head as free markets potential for social good. And there, I think that the record is pretty indisputable, right? Almost every example that you were alluding to, most of these cases are fairly isolated. These are not, I think as an industry, we like to celebrate them, and I think it's great to celebrate them. But the reality is it's pretty fringe, the freelancers in Iran or in Argentina who are taking Bitcoin payments, but they're there. And it's probably a growing phenomenon. I expect this to continue to penetrate more parts of the world where people want access to global financial markets, and they want access to a global set of potential employers and labor markets. And all of that is being powered by a free movement of a new kind of money that previously was subjugated to the decisions and the whims of local governments and regulators, many of whom don't have their citizenry's interests in mind. So I see that, this is another thing that people, I was listening to a podcast talking about Forte, and blockchain gaming. And this is another thing, right, that has been going on for a long time, where you have people who are providing services, creating digital goods online and trying to get paid for it, providing services to people in the first world. And that, of course, is also something that's going to grow over time, is there's going to be an economy of labor in not just, me providing, graphic design or copywriting for somebody in the first world, but, attaining digital assets that have their own kind of value in a game world, like in a Fortnite or a World of Warcraft. All these things, I think, are converging on the same trend, is that blockchains open up markets. They open up markets that were previously closed off. And they're sort of digital native markets, they're internet first markets, and they're global markets. That, I think, is one of the largest wellsprings of social good that blockchain is going to unlock.
Mm-hmm. How do you invest with that in mind? Like, to what degree is your thesis shaped to capitalize on what you're expecting to occur?
One of the biggest theses that we have is that one of the largest use cases for crypto is going to be in stablecoins, sometimes also called crypto dollars, right? So these are digital currencies that are like Bitcoin or like Ethereum, but they're pegged to a dollar, which is, of course, the reserve currency of the world. It's what most people think about when they think about what money is. So, one of our biggest investments is in a company called MakerDAO, which is a decentralized system that produces a dollar pegged stablecoin. And one of the big use cases that we see is that demand for dollars is going to grow around the world, but particularly demand for censorship resistant digital native dollars that are accessible from anywhere in the world. Right? That's a new thing. We haven't really had anything like that before. And although, like we said, all this stuff is still fairly difficult to use, difficult to access, the transaction costs are high, the onboarding costs are high, but at the end of the day, this is something that we already know people all around the world want. And if they had ready access to it, I have a lot of difficulty imagining that this stuff isn't going to continue to grow. So the idea that blockchain is going to democratize access to financial markets and to financial assets that people want. That's core to the way that we think about how blockchain is going to transform the world.
Mm-hmm. But there's a degree of complexity, right, that still makes it difficult for folks on the fringes to wrap their head around what might the benefits of something like MakerDAO are. And I know that at Finance US, Rena, you guys are working hard at bridging that education gap to a degree. While, Finance US is an exchange, it's in the business of making money on trading fees, right? That educational element does kind of help us get from point A to point B in terms of bringing more people into this open financial ecosystem.
Absolutely. It's something that is the core tenet of our exchange, and actually the only reason why all of us work at the exchange. We want people to know what it's like to get into your first position of crypto. I want people to know how to read the charts and anything of that nature, because a lot of people may not have had that education. I am an engineer by trade, but I never got a course in financial literacy in college. Like, engineering school did not teach me any of that. And this is my second wave of education coming forward now, especially when people are at home during COVID, quarantine at home, colleges are now online, things like that. And these types of education videos and content that we're putting out is giving people an alternative solution to what finance looks like in America.
It's kind of like a double-edged sword, right? You sometimes folks might have too much access, and this has been an ongoing debate with the stuff going on with Robinhood, with folks having access to trade complex derivative products that they probably shouldn't be. And the big trend sweeping the crypto market these days is the surge in the Link Marines. And I think they made up more volumes on Coinbase yesterday than Link Trading made up more volumes on Coinbase yesterday than Bitcoin volumes did. And on Gemini, I think they made up something like 15%. So in the process of trying to build this open financial ecosystem, there is this concern maybe that people are going to get caught up, and regular folks like me might get caught up on the wrong side of a trade, and maybe on the wrong side of a link trade.
Yeah, there definitely is that aspect. And I think as an exchange, we're very cautious to make sure that people do their own research before they make a trade or anything like that, and putting out what you trade, and you should only trade how much you feel comfortable with getting into an investment in a smarter way, like dollar cost averaging, putting out a little bit more simpler ways to get your first foray into crypto, where you're not going to put your entire stimulus check into Bitcoin necessarily. We want to make sure that there's a little bit of a way that you can diversify your assets. I'm sorry, there is a dog barking right now. But yeah, an easy way to diversify your portfolio that makes sense for you and how you think to wish to invest.
Yeah, no, I think that's important. Steve, how do your portfolio companies sort of approach that or grapple with that question of maybe providing too much access?
The speculative access, you mean?
Yeah.
Yeah. That's a good question. I mean, the honest answer is that I don't think people in the space think a whole lot about how to protect, mom and pop investors. And in a sense, it's part of the originating ethos of crypto, of like, the sort of the libertarian kind of, every man for himself, the sovereign individual philosophy that I think undergirds most of the crypto ethos. And I don't think it's the healthiest thing in the world. And there are times when I think the space obviously needs more regulation. It needs more clarity around the way that some of these markets should be structured. At the same time, I also try not to focus too much on the speculation, not just because it's sort of kind of unseemly at times, but also because I think it sort of distracts from the main thing that's happening. In the same sense that if you were following along the internet industry in the late 90s by seeing what's going on with tech stocks, you would basically assume that everything that's going on is just this big speculative bubble, and there's no real, there's no there. And if you were purely benchmarking off of seeing what's happening with speculation and stocks, undoubtedly you would have drawn the same narrative. The only way to really understand what's happening is to sort of look past the financial markets and to look at the underlying technology and see, what's really happening, what real innovation is taking place, and how is this likely to change, sort of non-speculative user behavior 5 years from now, 10 years from now, 15 years from now. And, what we're starting to see, I think, is the real ripplings of something that's likely to actually change the world in pretty substantial ways. So, I was just talking about stablecoins. On any given day, Tether, which is the largest stablecoin right now today, trades more volume than Bitcoin. You could argue pound for pound, it's the most product market fit of anything in crypto. And at bottom, what it does, it gives people access to dollars from anywhere in the world, from places where they normally would not have access to those dollars, and allows them to settle those dollars more cheaply and more quickly than any other way out there. And that has a lot of consequences for things like remittances, for international trade, and for even things as simple, like you said, of paying a contractor in a foreign country. So these things, I think, are, I have no idea if Chainlink or this Aave or whatever is going to be around today or tomorrow, but I have a lot of conviction that the trends that we're seeing going on in crypto, they're not going to reverse. They're not going to change. They're only going to accelerate from here.
Mm-hmm. And you do have a number of projects out there, CeeLo, which is one of the projects you're invested in, and obviously the ubiquitous, omnipresent Facebook Libra are trying to achieve, some social good via banking the unbanked. That's at least their desire at a certain point. When you think about those types of projects who are trying to empower people with a new type of financial infrastructure at their fingertips, how do we build, or how do they build those on-ramps? And Rini, you have some experience in building out some more retail orientated on-ramps. How do we get the on-ramps so that folks can actually start engaging with these new platforms that are aimed at lifting them out of their sort of situation?
Yeah, I think that's awesome that they're bringing light to the conversation that there needs to be a digital dollar, or there should be something alongside that a currency that the world can use and access to dollars. As far as on-ramps, I know at Binance US, we have multiple on-ramps, whether it's fiat rails or crypto to crypto rails. I think we're at maybe 70 pairings or something around that bubble. And we're only adding more and more. We see that people want to get in. We see that they want to be able to trade out a crypto for a stable coin, something like that. And we want to provide every single on-ramp that we can. Right now, we have fiat, crypto, working on other things like other payment solutions and things like that, where crypto can be used more accessibly, especially with stablecoins.
Do you see folks sort of leveraging the platform to, engage in remittances, maybe send back money home to sort of, help family and friends, those sort of use cases?
I personally use BUSD to send money to India. So there you go.
Actually, I want to weigh in on this notion, Frank, that you were just talking about, of banking the unbanked, because this is like a crypto meme with which I have a long love-hate relationship.
Yeah. So I accidentally said unbanking the bank.
I know. I noticed that too.
Which is what we really need to start doing.
Right. Exactly. There's a little bit of that going on too. I think Binance is making headway there. But in terms of banking the unbanked, my thought is that generally speaking, with technology, and this is kind of a general phenomenon that I think applies to this particular discussion, is that most often the things that lead to the most impact on social good and increasing welfare around the world are not direct effects, but sort of secondary effects of things that are happening. I mean, this is the whole underlying thesis of capitalism, right? Is that capitalism and free markets, they uplift people who are basically getting access to more and more opportunity, not because they're principally designed to do that, but as a side effect of just increased trade and economic activity. In the same way, new technologies are very seldom addressed toward, hey, let's create cell phones so that we can help people in third world countries, communicate with each other more effectively. That's not why the BlackBerry was created. It's not why the iPhone was created. Right? The iPhone was created to help, business professionals like me and Reina to communicate with our colleagues. Right? Like that was the market that they were originally going after. And now you have, Android phones that basically come from a long lineage, starting with the iPhone and with the BlackBerry and with everything that came before it. Now, being distributed in third world countries such that billions of people around the world who had no connectivity whatsoever have now leapfrogged their way all the way onto this digital stack. I expect the same thing to happen with crypto, in that it will likely not be the people who are single-mindedly focused on how do I do social good, who are going to produce the very, very large effects that will end up penetrating many parts of the poorest corners of the world. It will instead be people who are trying to solve the proximate problem of how do I incentivize more commerce and capture a portion of that commerce? How do I create more economic opportunity and capture some portion of that? And it's like, banking the unbanked is this notion that there are some people around the world who it's too expensive to bank, right? It costs more money for a bank to bank those people than they would earn. That's why banks don't bank them, right? It's not a question of we don't like this group of people. It's a purely financial question. Banks don't give a shit about social good, generally speaking. What they're trying to do is they're trying to make money. So what I see crypto doing is gradually over time lowering the fixed costs of onboarding somebody onto a financial system, right? And that will keep happening, but it will not keep happening because of this juicy prize of the unbanked, right? The reason why that will keep happening is because there will be more and more demand from people outside of crypto who want to use the services crypto have, but it's too annoying, it's too difficult, it's too hard, it's too confusing. And so it's in crypto's own interest to lower and lower and lower the barrier to entry and make it easier and easier for people to make their way onto the platform. And that's what's going to lead to this ever increasing openness and getting more people onto this financial infrastructure. So it'll be, once again, I think, par for the course with technology. It'll be a side effect of innovation as opposed to the principal directive behind that innovation.
So with that in mind, what advice would you offer then to Libra or CeeLo as they sort of continue on their journey?
Right, like the response that you saw from regulators to the Libra was just, immediate fear and breathlessness and exasperation and like calls that Libra was going to destroy the world and completely disrupt the global financial order, which, if you know a whole lot about fintech and the history of fintech, it's like kind of difficult to believe that that was going to be what Libra did. But it shows that, people are, I think people have a very poor understanding of cause and effect, and they have a very poor understanding of, the power of startups to actually, transform the world on a short order, which is generally extraordinarily rare. But second, of course, is that like the Libra was not really equipped to bank the unbanked, right? The Libra was everybody who's going to use a Libra wallet was going to be KYC'd by somebody, most likely somebody who is basically functioning as a bank. So the story from almost all of these things is that banking the unbanked and getting to that the wider circle. I mean, same thing is true for Cello. Same thing is true for MakerDAO. All of these crypto projects, right? You can only really serve the customers who are here. It's a little bit of a fairy tale to say that my customers are the customers who nobody else can even interact with because they're so closed off from, or they're so isolated away from the rest of the market economy. The side effect of this increase in commerce and the lower and lower costs of entry and the fixed costs of sort of banking and financial infrastructure, with those costs going down, more and more people will enter the fray, and then you can address those customers. But you can't address them before they're here.
Something that seems maybe a little bit closer to burgeoning, coming to fruition more quickly is sort of the development of stablecoin, right? And Rena, I know your colleague Catherine has written about this quite a bit, about the degree to which stablecoins can help improve the financial infrastructure in the near term. We look at something like the stimulus checks folks have gotten, the degree to which snail mail has kept money in the hands of people who desperately need it, while at the same time, the government's been well equipped to pump and maintain liquidity on Wall Street the same hasn't necessarily been true for Main Street. I guess the question is, what does stablecoin activity look like on the platform, and how do you as an exchange sort of capitalize on that trend and then help maybe expedite its development?
Yeah, so like with stablecoins, especially regarding the stimulus check, had the US government considered doing a digital dollar equivalent to distribute the stimulus checks, there would have been one, transparency on chain to know when your check was coming. Two, it would have reached you instantly, right? You just needed to wait for the settlement confirmation, which is a hell lot quicker than snail mail. So it's just like to bring that access and basically bring the mobility forward, that you have the funds in your hands now, and then you're free to use them as you wish, whether it's to make payments, whether it's to buy things, whether it's to invest or hold in a savings account and try to generate a yield. That's what I would like to see stablecoins do. Unfortunately, I think the government is still a little bit not ready to distribute that sort of technology, but I think it's something that should at least be warrant a fair conversation. From the exchange perspective, we're seeing more and more users requesting daily to have more pairs of against crypto assets to stablecoins because they like the liquidity of stablecoins, and they like that they don't have to speculate whether it's a BTC pair, whether their value is going to fluctuate up or down. With the stablecoin, they know exactly what they're getting, similar to what you would see in a normal equities market where everything's quoted against the dollar. So I think that's what users are really wanting. I get daily emails from customer support asking for, please add more USD pairs, add more USDT pairs, add more BUSD pairs, and we're listening to each and every one of them.
Interesting. Yeah, I wonder like what will happen though in the future when you have these various governments trying to build out their own DLT based, currency, whether or not you'll see the folks building out stablecoin systems then, come to head with the different national governments, the leviathans, if you will. How do you see that shaping out, Haseeb?
So I am a bit of a central bank digital currency bear. So I tend to believe that there's a lot of magical thinking that goes around when people talk about this particular subject. Like, I don't know how much time we have, so I don't want to go too deep into the weeds on this particular question. But basically, I think
no one stopped me yet.
That's true. We'll wait for the cane to pull you off.
Exactly.
I think, so for a central bank digital currency, right? The one thing to keep in mind is that so central banks are already digital, right? That's already like the problem with central banks is not that they don't have a digital ledger that keeps track of the balances everybody owns. The Fed already has that. All central banks around the world basically have that. The question is whether or not they bank retail, right? Will retail being able to directly have accounts at the Fed? How will that affect our ability to basically perform, enact monetary policy more directly at the central bank level compared to what we have today, which is this clear separation between monetary policy and fiscal policy that's very difficult to intermingle. So one, I think most central bank digital currencies, they transfer a lot of power away from fiscal policy to monetary policy in a way that I think not a lot of people have thought through the consequences of. A lot of people have, but I think not a lot of people in the crypto space have thought very deeply about the consequences of that. But second, I think they also have a lot of magical thinking about the competence of central banks to do a lot of the things that right now are done by the banking sector. Like, for example, to figure out who is a real person and who is not, right? Like, central bank is not really an institution that's equipped to do that. Like, that's a lot of anti-fraud and a lot of signal detection and a lot of, doing KYC type work that banks are supposed to be good at doing. And they built out massive departments to be able to do this. The Fed has no idea how to do that. So, and this is true. I spend a lot of time thinking about DCEP, which is the Chinese central bank digital currency, which is the first one that's likely to go live. And there, it's a little bit more clear cut. The story of what DCEP is doing is really more a transfer of power away from the banks toward the central bank, which is in a lot of ways like not necessarily what you want, because right now the central bank is completely controlled by the party. And right now, if you're banking on WeChat or on Alipay, as opposed to banking directly with the central bank, really what that means is that now there's no line of separation between your financial activity and the government. And maybe you don't want that, because the banks actually do serve as an intermediary buffer between yourself and the government interest, even though, banks are, I think, no friend of most people who think about this very often. But, I don't know that the Fed will be that much more of a friend to you than the banks will be. So anyway, all that is to say that there's a lot of really practical problems with thinking through how this stuff is going to work. And also, given how bad banks are at software, I'm not all that confident that the Fed is going to be particularly better in implementing good software for the majority of random moms and pops to be using for their banking infrastructure.
No, I think that's a good answer. I want to take things a little bit more high level to maybe incorporate some of the listeners who aren't deeply involved in this market in the way that you two are. I'm sure a lot of listeners or a lot of the folks watching who are maybe semi-crypto skeptic look at this space and think, what are you talking about? How are they going to improve things for folks who are, maybe paying overdraft fees out the wazoo or can't even get a bank account for whatever reason, when if I put my money on an exchange somewhere, it's going to get hacked. It's going to get quadriga'd, so to speak. That's obviously a massive gap for folks like you, Rena. How do you overcome it? How do you present the value proposition of either buying Bitcoin on Binance and then maybe storing it yourself, or engaging with a ecosystem that doesn't have, or rather has, quite the checkered past?
Yeah, it's definitely a tough problem to solve, and how to reassure our customers it's not an easy process. Obviously, you have the option of leaving money on the exchange. You have the option of withdrawing your funds from the exchange and putting it into your own custody. The way I see it is, how much accessibility do you want to your funds? Do you want to be able to move them in and out of a different asset instantly? Then you're probably going to leave it on exchange. And if you're going to leave it on exchange, especially like Binance, you're going to have to trust our security. And to this day, I believe Binance US has not been hacked. I've been here for a couple months now, and I can say that we haven't been hacked, and security is the forefront of what we do. I personally leave some of my money on the exchange, and so I have to put my money where our tech is, right? And so it's like, we think about all the different assets. We have all the regulatory framework of on-chain monitoring, an entire dedicated team watching out for every single one of our users' funds. I don't want to see anybody missing a single cent of their funds. So we're extremely cautious about this and have a team there for it.
Yes, well, that's definitely reassuring. Let's see, what do you
Is the security?
know? What do you
You need to think about Binance US. We are two separate exchanges.
No, fair enough.
What do you think about maybe this more existential question of the cryptocurrency industry's reputation?
Yeah, I think it is. It's a real subject of concern, because obviously anything that peddles in basically totally unfettered financial markets is going to attract hucksters. It's going to attract fraudsters. It's going to attract criminals of different kinds. And Bitcoin, for better or for worse, it was sort of born out of its first use cases being in darknet markets and facilitating illegal activity. And we can't pretend that that's not true. That said, Bitcoin has outgrown that. Now I think there was a recent report from Chainalysis that less than 1% of all the activity on Bitcoin is associated with illegal activity. And so it's clear that today the majority of what's going on is above board, even if it's a little bit silly, with respect to speculation and so on. But I think this is a natural progression that we see with almost every technology, is that it always starts off looking like a toy. It always starts off looking like something that is very easy for serious people to ignore. And the more that it looks like that, the more confident it makes me that there's real innovation happening, because it sort of pattern matches almost everything else that you see with technologies that have been wildly successful and disruptive. One of the it's a commonly told story that one of the first use cases for the internet was for porn. And obviously, the internet I mean, it hasn't quite shaken it off completely, but for the most part, it's not what we associate the internet with today. And in the same way, I think the crazy speculation, the ICO boom, and all the stuff that I think will increasingly belong to crypto's infancy, we'll look back on and say like, whoa, wasn't it crazy when crypto was this like thing that was associated with hucksters and get rich quick schemes, and at some point it just gets embedded into the fabric of how international commerce just works underneath the hood. So when I first got into crypto, I remember telling somebody that the two big technological trends that I think about a lot are AI and crypto. And I think what you'll see in the future is that AI will start to power almost everything around you. You won't be able to help but notice that AI is conducting a lot of the services around your life. And blockchain will mostly be invisible. Blockchain will be something that starts to just work underneath the hood, but you won't see it. Everything will just look easy and clean and simple and painless. But in the future, we won't be, no offense to Reina, but we won't be like trading on crypto exchanges. We won't be using crypto wallets. We won't be, all this stuff will be abstracted away from you as an end user. It's just going to be the way that things work.
Reina, how do you think a firm like Binance US can adapt to that potential future? And then we'll wrap things up because I think we're at the 45-minute mark.
Yeah, I think Steve brings up a really good point. Blockchain will almost be native to everything under the hood that we'll be implementing in the world, especially in America. And as an exchange, it's our job to facilitate how we can maybe facilitate those rails in a more seamless manner so users don't necessarily know if it's an asset or blockchain, like what it is. It's just a simple buy, sell, that's it. Are you buying something? Click buy. You don't need to know whether it's being on the back end, whether it's being done with the crypto payment, whether it's done with fiat, stable coins, it doesn't matter. We want it to be as simple as that. And so it's our job, one, to provide the education for that, and two, work with these other operators who are creating these movements to facilitate it in a similar way and keep it quick.
Yeah, and we shall see. And we'll follow up in a few years' time and check in on each other. Ladies and gentlemen, thank you so much for tuning in. I hope you enjoy the rest of the Treasury Summit. Take it easy. Thank you.
Everybody. Thanks, Frank.
Take care, y'all.
It's fun.
Cheers.